Let's talk some Uber, guys. Now valued, as you probably know, at $40 billion. In that blog post that hit this time yesterday, CEO Travis Kalanick said the company had raised $1.2 billion to fuel its expansion. And Kayla, you have some more on the financing news here.
Yeah, of course. Yesterday we were talking about the fact that Uber made a filing that it would raise or could raise up to $1.8 billion in equity, and there's still a little bit of room there if they want to bring in other equity investors. But I've been doing some reporting on the debt side of any additional fundraising here for Uber. Goldman Sachs has in recent weeks launched a $1 billion convertible debt offering targeting primarily family offices via its asset management unit. And there have been some details, guys, coming out about exactly how this would be structured. It would be a 6-year bond. It would convert into equity around the time of an IPO at a discount to the IPO price. And that discount would increase the farther away the company gets from an IPO if it misses certain benchmarks within, say, 1 to 4 years. And, of course, the question is going to be, what does this mean for an Uber IPO? How soon could we see that IPO happen? When I talk to bankers and people who are familiar with this deal, they say there is no rush for the company to pursue an IPO. This gives it a multi-year window and a ton of financing, as the company has said, to fund its growth, especially in Asia and beyond. But it's interesting to see debt, especially convertible debt, being a portion of pre-IPO fundraising at these levels. Kara, there are the comparisons that are drawn to what Goldman Sachs did with Facebook, $50 billion valuation. 16 months later, Facebook's valuation doubled when it went public. But this seems to be a little bit different. The Jobs Act rules around the number of shareholders they can have, that's changed. Uber is not an emerging growth company because it makes so much in revenue. And, at this point, the company doesn't seem to be in a rush to go public. And I'm wondering, Kara, how you would compare what's happening with this Uber deal to what Goldman did with Facebook.
I mean, it's similar. It's a similar thing. And these people are having money thrown at them, so why not take it at these amazing terms for them? And they've got to expand. In India, for example, they're losing money. They're giving away rides, pretty much, in order to win market share. And so it's certain key markets internationally they've got to really win. And so it's really, and here in the United States, they have to continue to fight and expand because certain cities they're still having problems in. And so it's a very expensive proposition, the expansion. So the more money, the better. About going public, I think that they will go public. The management staff has to get a little bit more mature, just the way Facebook did. They can't have kind of these ridiculous PR snafus that they've been having. But, Facebook did go through that too, and certainly, improved its management staff, and at least they knew how to behave, at least. And so that's, I think you could possibly see an IPO in 2016, 2017. But there's no rush to do it with all this money being thrown at them, and Travis is very smart. He's taking it while he can get it.